Under 10 minutes, we're going to walk you guys through a detailed beginner's guide that's going to help you to improve how you trade and trade good consistently, regardless of any market condition, and you'll be also profitable. Now, this video is not one of those videos we're going to go through any complex strategy or sophisticated indicator. We're going to be trading using pure price action, and regardless of which strategy you use, you could apply this and get your results. Now, this is going to be a 5-part mini series because there's going to be a lot for me to unpack, and one video is not enough to get the job done. Now, if you like content like this, make sure you hit the subscribe button, turn on your post notification so that you don't miss updates when we drop the 5-part mini series. Now, also want to give this video a thumbs up so that other beginners will find this video and will learn from it as well. So let's get right into the video. So for starters, what you want to do is you want to keep aside whatever trading strategy or concept you've been using and basically allow yourself to learn this simplified method that you could apply to whatever concept you've been using. Now, you want to understand that gold in itself has different market cycle, and different market cycle do bring alongside different modes you want to approach the market and different trading technique you want to use as well. Now, secondly, you need to understand gold as an asset class in itself, and also we'll have other things we're going to look at while we'll do the 5-part mini series. Now, for the start, you want to look at gold from the bigger time frame. Now, from the daily time frame, let's look at this closely and observe what is the current market cycle we have from the price action we're having on our screen up to the present one. Now, if you look at this here, you can see from here we had a major uptrend. We moved sideways for a bit, we resumed the uptrend market condition, we had a sideways movement for a significant period, we had a major breakout, we moved sideways for a bit, we had the uptrend, and this was like the other major sideways movements before we had this major breakout, and we had price trapped around this region, and now we've broken out. Now, these on the daily time frame gives you more like an overview to know what the market condition is. Now, different market condition has different tacts. When the price is trending, you want to look for every possible buying opportunity when the market is trending to the upside. If it's trending to the downside, you want to do the same. You want to look for every possible opportunity as it's pulling back while it's selling. Those pullbacks will be where you want to filter out your entries. However, when the market is moving sideways, is a different ball game. That's when you want to apply things like support and resistance. Okay, now keynote, you want to replay this again and maybe take your time to get the concept of what I've just explained. So let's look at what's the current market condition we are having now in the market. So if I zoom in closely and you look at this, this is the most recent price action we've been having on gold. So if you look at this here is the most recent keyword, most recent. Just looking by your left, you can see this clear wave where we have the impulsive move to the upside. We've been trending up consistently. This was when we had some major pullbacks and sideways movements, and we've broken out, and you can see that gold is currently trapped around this region. So if you look at this over time, when we've been having all of this explosive uptrend, I have been consistently picking those buys in the Telegram community. I'll leave the link in the video description. You need to just go to the community and observe what we've been doing over time for you to get your confirmation that okay, I understand what I'm talking about here, and there is a degree of backup to it. Now, the next thing you want to look at now, since we're on the daily time frame and you've seen okay, gold is probably maybe consolidating, trending up, or whatever it is, the next thing you want to ask yourself is, do I want to day trade? Do I want to scalp? Or do I want to swing? Now, this is also going to be dependent on how well you've built your trading over time. Now, if you want to scalp, let's use scalping for example, you want to understand the direction for that particular session, keyword that particular session. Why? Because you want to just focus on what you can get within a trading session. It could be London, it could be New York. Now, gold usually moves significantly New York session and also London session. These are the most peak sections where you find gold giving you the most out of it. Now, if I'm scalping within a session, I will want to wait for gold to commit. Basically, for a case scenario where we're having a trending market, if we look at this here, what we want to do is I want to look for, gold to give us that confirmation that, okay, within this session where I want to scalp, where is the market lows? Where is the market high? Where are we currently trading around? These three questions are what you need to answer. Now, if we use an example of this here, this was, the market lows here for when gold was trading around this zone when it was trapped here, and this was the first major push from price. This was the first retracement, the first major push, the second retracement, the last leg before we entered this major consolidation. Mind you, all of these moves here was traded with the community, with my Telegram community. So you want to also check that out and also come back to this video and follow up with what we're looking at. So let's understand, how do we manage our trading within a ranging market. Now, for a ranging market, you want to first of all identify the market lows. Again, this is the second time I'm mentioning it. Then the second thing you want to do, is you want to ask yourself, which session are we? Are we currently in New York session? Are we currently in London session? If we're in London session, you want to allow price to go and retest or break the Asian lows. Now, this is what I mean by that. So if we've had price, trapped within this significant high and this significant low, and price has done this already, and we are currently right about here, and the London market is opening. What you want to wait for is for price to at least retest these lows here, and every single bullish momentum you get, you want to keep a close eye on it and jump on it to make the most out of that session. Why? Because we've already retested the previous low and we are rejecting off a key significant level. Now, if you look at this now, if we go down to a lower time frame here on gold, if we go to a lower time frame, this is going to be a very good example of what I mean here. So if you look at this here, gold has dropped to this significant market low. We had the first push. This was the first major retracement. This retracement came back to retest these lows here, and this was the first move up. Now, this here is what you want to gun for and focus on for the day. If you're session trading, you're scalping, or you're day trading, this is what you want to do. You want to get in and make the most out of that session, and you're out of the market, you're done for the day. Now, the second opportunity came the following day. Price moved sideways for a bit. We retested this key significant low here, which is where price retested the previous lows of the Asian session. Now, you want to allow price to do that because price will want to retest that level before it starts the movement it has for that day. Now, if you look at this entire move happened during London and New York session, and price did not look back. Why? Because we've already mitigated the lows for the previous day, and we understand that we are trading a ranging market, and what we want to do is you want to play price from one key significant level to the next. Now, if we zoom out a little bit here so that we see where we are trading at, you get to understand that price basically bounced off this region, came back to this region, and we traded back to this level here. Now, you want to keep an eye to the left side of your screen. On the left side of your screen, you always have clues. You always have footprints of price from the left side of your screen. So this is one thing you need to have in mind. Now, the second thing that I mentioned earlier was understanding the phase of price movements. Are we ranging? Are we trending? Or whatever it is that we're doing. Secondly, you want to understand gold as an asset class. The best times to trade gold are usually New York session. You do also have London session as one of your good times to trade gold. You don't want to trade gold during the Asian session because you get less volatility. Now, whatever part of the world you're watching this from, you want to basically keep a close eye on these major trading sessions, and if you can, that's when you need to be more active. Now, on the next mini series, I'm going to touch on what are those confirmations that you need, and what's the degree of retracement you want to use if you want to trade gold when it's trending. Now, trading gold when it's trending is usually very profitable. However, it's usually fast paced because price is usually going to be get towards one direction and might not give you so much confirmation. So we're going to look at key confirmations you want to pay a good attention to. So that will be all for the first part mini series. The second, we're going to talk on trading confirmations and what to look out for on your chart. Onto that, I'm going to link this video and the video description to look at how we trade high impact news. If you want to learn how to trade high impact news and also improve on that, click on this video, and I'll see you in the next one. Keep it simple.